Welcome back to Market Day Report. Well, we have an exciting day here. We're still digesting those USDA numbers. Let's not waste any time and let's just look right into what the markets are doing. I guess the question you should ask is, will corn get up on the day? It is possible here. September corn 407 3/4, down 1.5. December corn 424, down 1.5. March corn 439 1/4, down 1 3/4. May corn 449 3/4. Let's just call it 450 for easy math, down 1 1/4. Soybeans, we started these markets much lower, but they are definitely mending themselves. August soybeans 1027.5, down 2. September soybeans 1017.5, down 0.5. November soybeans 1025 3/4, down 1 1/4. It was not that long ago that we traded 1074.5, I believe, in November soybeans, just a matter of a week and a half ago. Looking at the wheat, we'll start with Chicago here. Board of Trade wheat up 5 3/4 in July, which that month is going to be expiring here shortly, 534.5. Let's look right into where the liquidity is. Liquidity is in the September. Probably some of you trade in December, but September wheat 545 3/4, up 7.5. December wheat 565.5, up 5 3/4. So head over to KC. We'll look at September KC up 1, 527 3/4. December KC 551, up 1. Spring wheat, again, I was saying on the first segment here just a little bit ago that we're trading multiple spring wheat contracts. We have one spring wheat. This is so important to understand this. There's a spring wheat contract at the CME Group, and there's a spring wheat contract at the Miami Exchange. And if you need help understanding that, I guess I would say, like everyone else, Google it, right? Or just give us a call or DM me or someone, ask an expert on what's going on with these two spring wheat contracts. SEP spring wheat 621, we'll call it unched on the day in December, 639. We'll head over to cotton, then we'll bring our next guest in here. Cotton down 2, December cotton 68.43, up 30. Let's not waste any time. Let's bring him in. Let's see who we have here on the line. Hi, Eric. How are you?
I'm doing good. How are you today?
I'm doing well. I miss your handsome face, but we'll get the virtual you, right?
Well, I've got the face for radio anyway, so here we go.
All right. Educate us. What do you think of the USDA report and how we're the price action here last 24 hours?
Well, I mean, the last 24 hours, hopefully the hate selling has subsided here just a little bit. Obviously, the USDA report didn't bring us at least the reaction that we wanted. There were some, small bright spots I would point out within there. Certainly old crop corn demand still is looking good. I suppose that was the big thing that I saw in there. You couldn't tell, of course, obviously from the markets. It didn't give any big surprises, and I think just time of year, the overall weather outlook still looking pretty conducive to a nice crop here in the U.S. Uncertainty of the trade tariffs and results from those things, especially with China, all those things, not new headlines necessarily. I mean, I guess if I'm looking for any other silver lining, again, this morning kind of looking at the U.S. dollar, seeing it's down almost 11% year to date so far. It seems to be a little lost in the background with all these other headlines, honestly, that we're trading right now. But longer term, I mean, that weakness in the dollar is a good thing. If and when we get some of these tariff discussions out of the way, especially with China, certainly seeing a weaker dollar should help us out. I've always described that as a current our exports are swimming against is that U.S. dollar, and the lower that is, the less strong that current is that we got to fight against. So Excellent. There are some things out there longer term to look at. It's just in the short run, we need something to change, and a headline, a black swan event, as we call it, and still waiting for that to show up.
Perfect, Eric. You stay right there. We're going to pay a couple bills, go on a little commercial break, and then let's talk meats when we come back here with more Market Day Report. Stay right there. Welcome back to Market Day Report. Well, we got some exciting news. Maybe not the news you were wanting. Depends what side of the market you're on. We've had a heck of a bull market here in cattle, but not that bull market's taking a little break. Let's look at the quote board here in live cattle. As we look at August, down $3, 210.95, 211 almost. Live cattle 207.70, down 250. Looking at December live cattle 208.10, down 255. Feb and April all with the 208. Pretty interesting how they're all trading within a few, so close in price at that 208 level. This is what people are talking about. This is the feeder cattle. August feeders, 305.62, down 5. We hit a low at 304.57 here just a little bit ago. Let's look at the SEP, 305.67, down $5. Everything, Oct, Nov, and Jan all the way down 490, 470. The highest prices in front, the lower prices in back. It's been a big bull market. I'm very interested to see what Eric has to say about that. Looking at lean hogs, they have been extremely volatile. They have been in an uptrend for the year. July, lean hogs, 109.45, down 65. August, 107.15, down 35. Go all the way out to the D's, not as great a prices, 83.80, up just a smidge for the day. Let's bring him in. Eric, tell us what you know, my friend.
Well, we'll start with the feeders since you mentioned that. Obviously, the news hitting regarding the, let's call it the slow open for the Mexican cattle being able to come back into the U.S. is, it's a new headline. I don't want to say it's a new headline, right? I mean, obviously, this is something that has happened over the last several months. We closed the border, we opened the border, we closed the border, we open it. So it's not necessarily a new headline, but it is something different for it to trade this week. So, yeah, it's a nice break here. It's deemed as a bearish, I guess, outcome there, or at least a headline, at least for today. But again, trying to remind myself and everyone else as well, if you look at the trend, if you look at especially a weekly chart dating back for quite a few months and years now, certainly it's going to take a bigger break than this to get a lot of folks to get their heads off their desk and say something different is going on. Now, we have seen cash cattle trade weaker here the last couple of weeks. That's interesting. You need to keep that in mind as well. So, everybody's looking for that canary in the coal mine, so to speak, is that, we're finally dinging demand, but I'm seeing boxes still trading just under the $400 mark, good golly. So, certainly weaker cash and boxes trading there. Packers are loving it right now, but I don't know that a whole lot, honestly, has changed just yet. I think it's going to take more macroeconomic headlines really to get that cattle market, especially anybody who's tried to short the market. They've had their fingers burned pretty badly over the last 18 months especially. So pretty weak fortitude we've seen in the past on breaks. So that's about all I'm seeing right now. I think we'll see how this headline plays out and whether this is a long-term pullback there for the cattle, at least in the feeders. I think you have to break down to 270 to even really see anything's going on in the chart, and that's quite a break. I'm not expecting that.
Thanks for joining us, Eric Osterhaus there with Pinion. He's always one of my favorites. He's always got a
really
smooth voice. When markets get volatile, you need that.
You need somebody calm. You really are a calming presence in everybody's life. Always love having Tommy Grisafi.
And back to you.
Thank you, Tommy.